I won't take much time, Subraidu, from now to you start your process. It's my pleasure to introduce Mr. Subraidu, our next session's moderator, who is the director, NPER Masses Consulting, and who is wow, I think I have to keep reading. CPS, CISA, CITP, CIPP, AICWA, IBBI, registered valuer, and so on. He is the founder director of NPER Masses Consulting Advisory Services LLC, a Delaware, USA-based CPA firm specializing in areas like governance, risk and compliance, enterprise risk management, enterprise performance management, and business valuation. And Mr. Subraidu, sir, I really welcome on board. And I'm sure that this is going to be a quite interesting session to all of us. And please take it forward. Floor is yours. Thank you.
And thanks a lot, Ramesh. Let me also take my time in introducing the panelists of this session. Could we have the yeah? Yes. Okay. So welcome one and all to this interesting session, which is a little maybe after we had hard tech and legal related ones, a little bit of a turn we're taking towards valuation and money and monetization when it comes to data assets. So the first panelist that we have today is Rajiv Sioni. Rajiv has been a former colleague of mine, and he has had a very rich and diverse background where he started his career first with the Indian Navy in the field of warship design and integration of electronic systems inside warships. And then he switched on to the corporate side, and he has a rich and varied experience of leading a technology function in many organizations of repute, including Ernst & Young, where he was the CIO of India, APAC, and I think the Middle East as well. Then he was, of course, the CIO at Hughes Software Systems, where we worked together, and HCL Infosystems prior to that. And he brings with him a rich background of tech implementations. Now, in his current role, he is associated as an angel investor with the Digital Futurist Angel Network, where he evaluates startups and advises and mentors startups. Welcome to the discussion, Rajiv. A pleasure to have you here. Next, of course, we have Navi sir. Introducing Navi sir is a bit of a challenge always. When I first saw Navi sir and heard him for several months, I used to think he was a lawyer. He's so firm was his grip on law. Then I realized to the shock of my life that he was not actually a lawyer. Then I said, "Hey, what is this?" Then he himself, of course, when I enlisted on a course for FDPPI, then came to know that he's an ex-banker with wide experience in marketing, merchant banking, and information security. He's an author of many books and a thought leader with innovative concepts such as Personal Data Protection Standard of India, Data Valuation Standard of India, Online Data Trust Score Self-Evaluation Tool for SME and MSMEs, and is also a sectoral, and also developed sectoral codes of practice. He is a qualified independent director by the IICA and is now aspiring and working towards neuro rights legislation, which is a novel concept in India. And he is a multifaceted personality, and his knowledge spans broad swathes of domains. Welcome to the discussion, Navi sir. The final panelist that we have is Mr. Vikas Suresh. He's the founder director of Unithos Business Advisors. Vikas and I, our association goes back to, I think, 4 or 5 years ago when he was part of the Bangalore Valuers Association. He still is. He's chartered accountant with 20 years of experience post-qualification, specializing in corporate advisory, valuations, joint ventures, M&A deals, business advisory across diverse sectors. And he was leading the South India valuations team at KPMG until recently, where he decided to start his own entity, Unithos Business Advisors. He's a regular speaker at various forums like VC Circle, Ideals Network, ICA Valuations Forum, and trainer for many registered valuer organizations. And we also keep taking a lot of inputs and advice from Vikas Suresh whenever we have any complex issue on valuations. And I thought there's a good panel to discuss the multi-dimensional aspects of data valuation today. we jump into the individual discussions, I had a couple of data points that I wanted to present. Is my screen visible, Ramesh?
No, you have shared it already?
Yeah, I have shared it.
Not yet.
Please. Not yet.
Okay,
Not yet.
Okay, let me.
Do me a yeah. Now it's coming up.
Now it's coming up. Okay.
Excellent. Thank you.
Couple of data points that I'd wanted to share, because to set the really stage for this discussion on data valuation. Now, one of these is a study in terms of the what proportion of the total enterprise value is represented by intangible assets. And sometime in 1975, the 5 largest global companies by market cap, okay, only 17% of the total enterprise value was represented by intangible assets. And if you also see the profile of the organizations, IBM, Exxon, P&G, GE, and 3M, bricks and mortar organizations. But as we move towards 2018, that ratio seems to have completely flipped. 84% of the total enterprise value in 2018 is represented by intangible assets alone. It's a total reversal, right? So the point that we want to draw from here is we are in an era when increasingly the total enterprise value of an organization is represented by intangible assets, and data assets themselves are an intangible asset, right? So to set the stage for our discussion and the recommendations that we have, the other data point that I had was in terms of what percentage of the total revenue do the big tech companies obtain from advertising. Why the focus on advertising? Because advertising, particularly targeted advertising, rides on top of the ability of the organizations to leverage personal data that we share with these platforms. Interesting part, Meta platforms, in bracket what you see, the source of revenue, the largest source of revenue is advertising, and that constitutes about 97% of the total revenue for the quarter ended March 22. For Twitter, it's about 92%, and whereas for Google, it is about 81%. So it means these big tech companies, their ability to leverage personal data, monetize that data, and gain superior valuations is fairly represented by these statistics, which are really startling statistics. A couple of other data points that we have, the top 25 global advertisers by revenue. If you see the trend between 2016 and 2021, what we see is that the 5 tech giants own over half of the advertising revenue. Once again, their ability to monetize the personal data that they've harvested over long periods of time. So we are clearly living in periods in an era where collecting data and monetizing that data seems to be a very profitable business model. And the markets also recognize that in the form of the rich valuation that these companies are getting. Lastly, a couple of months ago, I was going through some data which gives us some thing about this unique business model, which is known as data brokers. Now, what is it that these data brokers really do? So these data brokers typically collect data from multiple sources, including publicly available sources, as well as buying some data from, for example, if you see the picture in the left, about 1.4K leading brands sell information from store loyalty cards to these data brokers. So if you're signed up for a store loyalty card somewhere, chances are that your data would be landing up with some of these data brokers who are kind of gleaning your data to derive value out of it, and perhaps further sell these data onward to people who want it. 80% of US email addresses are on file on Tower Data, and 38% of employed Americans' pay stub information is available on Equifax. So coming to the what is the value? What's your data really worth? Couple of startling statistics once again. If you see $89 average value of one email address over time, okay, which means your email address can be gleaned by people who want to kind of target advertisements towards you or want to sell to you. The value of that over a period of time has been pegged at around $89, and within that, it's not a uniform case for all industry segments. For the travel industry, that value is pegged at around $251 over time. For retail, it's about $84 over time. So what all of these data points actually show us at the end of the day are that your data and my data increasingly has a lot of value. So, but at the same time, what we've also witnessed is that we don't see data on the balance sheets of companies, which is what Navi sir typically has been emphasizing on for quite some time. And for this, I had a couple of, I just want to throw open some discussion on these, on the monetization and valuation aspects to some of our panelists here today. So the first question that I have here is, as we've seen with increasing digitalization and, this humongous data being generated every day, coupled with the valuation gap between tangible and intangible assets, the first question that comes up to our mind is, are valuation professionals in accounting really behind the curve in recognizing the value of digital assets, and where do we really stand today in terms of putting data assets on the balance sheet? Vikas, you'd like to have a go at it first?
Sure. Thank you so much. First of all, thank you for this opportunity. It's a pleasure to be part of this forum. So, Subraidu, like how you mentioned that, there is a big gap between tangible assets being reported in financials and the market capital. And which we see one of the key areas of this could be, a lot of the intangibles which have been created by businesses. And with the emerging startup world, which we are seeing right now, the core of the startup world is, because they are yet to create a brand. So which means the core what they're offering in the market is the data, the ability to generate business in future. And somewhere, while it has not been presented in the balance sheets, when it is being recorded as part of the share price, or when it is being valued as part of the pricing in the market, a significant portion of the valuation is derived from the data which has the ability to generate revenue in future or the economic benefits in future. Which when we do a valuation for financial reporting purposes, normally which comes for every post deal requirement, we call it the purchase price allocation. With that time, when we try to break the price down into components which have been acquired, one of the critical components would normally be data, either embedded as part of a technology platform or embedded as part of some other intangible. However, that becomes a very critical portion in today's M&A situations.
Navi sir, before I move on to Rajiv Sioni's view on that, you have published the Data Valuation Standard of India, correct? Would you like to add something on this aspect, and at least maybe to begin with, share with our audience at least the key features of the Data Valuation Standard that you've presented?
Yeah.
Navi sir.
See, the fact that data has a value is universally accepted. So people are talking of various things like it is oil, etc., etc. And the way Vikas said, there are startup companies raising money, etc., also means that even if there are no land building machinery in an organization, just because of the data, there appears to be a value recognition as far as the companies are concerned. Now, when that is the reality, the fact that it is not reflected or is not visible on the balance sheet is a matter of worry from various these things, because when we talk of data breach, say for example, GDPR talks of 4% penalty. Now, whether a company which is having only 100 rupees data should also be exposed to 4% of the turnover, or as compared to another company, which, as you said, 97% of the revenue comes from data generated things. Now, this question comes up in terms of, if the value of the data is not visible to the shareholders, they cannot make and take an idea about whether my company is protecting its assets properly. Same thing happens to the CEO. If a CEO wants to run a company, he should first of all know what is the value of the data, which is one of the assets, which is in his custody. Then perhaps comes this valuers who are charging for ransomware and other things. Now, so I felt that we need to work towards building visibility of data valuation in the balance sheet. Obviously, the accountants of today are not ready to accept it. Immediate question comes is, it is too intangible. It is not even intangible. It is perhaps higher level of intangibility is attached to data. But at the same time, you ask somebody, why is Bitcoin carrying a value, that is also data. So there is a possibility, or an NFT, okay, it has got a value. At least people are willing to put money, even if they are losing it after some time, they are anyway putting the money and trading it. So value recognition for an intangible like data is there in the marketplace. So accountants, instead of saying that no, we don't have proper methods of valuation, should try to move towards finding a method. So I thought the first step has to start from people like us. Let us put something, good or bad, a valuation methodology before the accountants. Let them reject it if they want, or let them try to improve upon it, because they on their own may not know much about the data value. Now, this also came up because when we were discussing about the data protection compliance, I felt that you have to tell the management what is the value. So therefore, this should be part of our framework for data protection. So therefore, because of what we were doing in data protection and because of the general understanding that it is a matter of value, I felt data valuation standard needs to be developed without waiting for the entire country, entire world of accountants coming into board. So what I started was, first of all, we have to give an intrinsic value to the data. That is,
Right.
One simple thing could be cost of acquisition. If I have spent, say, 100 lakhs and now I have got, say, some 10 million data sets, you can say 10 million data sets cost 100 lakhs or whatever is that. So this is an old principle which we use in every asset listing. There are also other methods like revaluation assets and income based valuation, like a net present value of the future income. All these things are known to accountants. So I say accountants can use any of their known methods and then arrive at something called an intrinsic value for the data. Where I come in is the valuation of data changes because of personal data protection laws, which sometimes say that if you take a permission from a data principal for one-time use of the personal data, the value becomes zero after it is used. So depreciation is 100% based on not time, but on usage. At the same time, there are things like quality of data. There are quality of data deteriorates over a time. So certain depreciation has to be applied based on that. So therefore, the data protection law seem to impinge on the valuation. That is, if I have got, say, 100 lakh worth of data last year, this year it may be zero because all that is 1 year old personal data, which I am not supposed to use. So this is one factor which comes into the reckoning. Second is the depth of data. That is, data may have only name, it may have name, etc., address, etc. So depending upon the depth, depending upon the numbers, depending upon the quality, all these things has to be built into this data valuation standard, which is what I have tried to build a matrix called value multiplier matrix. So calculate the intrinsic value and then apply certain criteria to revalue it based on this multiples and then arrive at something. And that is what the accountant should say, that at least approximately this is the kind of valuation. So that is the model which I have tried to build, very simple model subject to the refinements which may be done later by the industry.
Definitely, sir. I think the point is well taken that if you need to manage something, you need to start measuring it in the first place. And today, if you're not measuring it, how are you managing it? That question is always up for grabs. So, Rajiv, one question, both in your role as, let's say, an investor, digital futurist, a former CISO, what kind of board oversight do you think would be necessary to ensure that, you know, this asset, which definitely everybody agrees as value, whether you're putting it on balance sheet or not is a separate issue. What kind of oversight do you think would be required to be exercised by the board to ensure that, you know, the value at least does not get depleted over time, if not getting enhanced over a period of time?
Let me start by first talking as a CIO, right?
Sure.
More from a technology and infrastructure perspective, which comes in all the applications that use data and so on. Now, one of the major roadblocks which we as CIOs used to face at one time was when we were talking of the infrastructure capacity, or we are talking of security. The first question was, what is the value of the item that you're trying to secure? I mean, it's like saying that you want to buy a lock. Now, how expensive should the lock be? Should it be a 7-lever lock or a 12-lever lock or a 2-lever lock? You have those mechanical locks with so many levers.
Yeah.
So the question is, how much money do you want to spend on a lock? Now, until you know what is the value of the property that you're trying to defend, it doesn't make sense in trying to justify how much of investment you need for the security device, right? So therefore, valuation of data or valuation of our technology itself has been a requirement or a need from a CIO perspective for many, many years. Now, what happened is gradually over time, yes, the business, and as you're saying, the board has realized the value of the data and the technology. When I'm talking of data, I'm also talking of the databases and the applications which ride on the data, right? And data itself, as Navi has so many times explained, data itself is of little value. It is how the data is perceived and used. So all of that, the valuation is becoming extremely critical now. The best part is, yes, the boards have understood, yes, these are very high value items. And therefore, the argument earlier of not wanting to spend on security, that has reduced. At the same time, it is still, from a CIO's perspective, it is still very important to know exactly what you're trying to protect. So there are a lot of things which come in. I mean, as you said, the data integrity or the data quality, as they say, right? How do you ensure that the data remains high quality? It doesn't get corrupted over time, or that it is complete, and also it is verified, it is true, and remains so over time. So those are the type of things which, from a technology perspective, have been extremely in the highlight, and we've been trying to do it. At the same time, what is the cost of collecting the data? And finally, what is the impact on the business if that data is not available? I mean, we've seen so many cases of ransomware where if the data is not available for a day or two, what happens to the business? The business, can it still run? Is there a way of running the business, or does it just stop? And therefore, there's a huge amount of loss because of non-availability of data.
Right.
So I think I'll stop at this time. I'll come back to the startups and the use of data later, but let me give an opportunity to other panel members to bring out their aspects.
Because any thoughts? I think from the moment Rajiv started talking about ransomware and all, the valuers inside both of us would have harked back to valuation method, the cost method of valuation or something, right? So any thoughts on what different needs to be done if data were to be represented as a separate asset class on the balance sheet? What's your first reaction if, let's say, today, as you rightly pointed out, the data is there, but it is embedded in certain other elements, customer list, customer relationships, and all that stuff, right? What's your response what's your reaction if, as Navisa suggests, they were to be separate asset class by itself by the name of data assets?
Sure. Yes, Subraidu. So see, from as a valuer and more from a even a market analyst or a business analyst, if I had to say, if for me, bringing data into the data as an asset is becoming more and more obvious and relevant in today's time. If we go 10 years back, or maybe even further down, where the balance sheets did not have software development in the balance sheets. Okay, because that time the industry of IT industry was just evolving, so we used to have only tangible assets and manufacturing used to be the only sector which we used to look at. So then when we started evolving in the software industry, then we realized that a lot of the amounts which are expensed off in the balance sheet or which are expensed off in the P&L, the benefit of that is coming in the future. I'm moving a little more from an accountant to a business analyst. Why it becomes relevant to bring it here? See, lot of the expenses being incurred today are towards a future benefit, which people will monetize some of the data and bring it. So if that is what they realize, that for IT companies, when they are building products, they're incurring expenses today. Those expenses are not relevant to be charged off in the P&L today.
Right.
Hence came the standard, the valuation standard itself modified itself to say, okay, self-generated intangible like softwares, which have a tangible commercial benefit, should be recognized. By recognizing in the balance sheet, I think, like how Navi said and also Rajiv said, there is a lot more of visibility and accountability which is coming in. The
Correct.
moment you have something on the balance sheet, it means it has to be tracked. There are a series of people who are tracking it, be it the accountants, the auditors are tracking it, the management is tracking it. Because it is there in the balance sheet, there is a moment there are market analysts which are tracking it, the regulators come into the picture and they start tracking it. So there is a lot more of accountability to it. And it is quite relevant in today's time when a significant portion of the value of a listed companies more and more is also
Absolutely.
being ascribed because of data.
Correct.
When data becomes that relevant, I think it needs to be at least brought into the balance sheet at some point of time. And then you get into the picture, whether it is historical accounting or a future-based accounting. As Navi said, that will evolve over a period of time. So when analysts are looking at it, they may revalue each of the assets. And one of the assets could be on data.
Yeah, absolutely. Very well said, Vikas. And that also, if you had to just go back to that point about the org structure and the board oversight that we had discussed a short while ago, if we all agree that there's a very important asset which is almost about 84% of the total enterprise value, right? Earlier on, Rajiv, you would have seen the Chief Information Security Officer was there. Now we're seeing Chief Data Officers come into the picture, right? I mean, we've also seen a great amount of divergence within the job description of a chief data officers across different companies, right? So, what kind of org structure? I think. Maybe I'm repeating this question. What kind of an org structure do you think is necessary today, given the reality of the valuation and the huge percentages of enterprise value, to manage these assets properly? In your experience, whether it be for a startup, and does it differ if it is a startup, or does it differ if it is a huge, a social media organization?
So I think this brings me to a very favorite topic of mine, and that is the evolution of the role of the CIO. If you remember a few years back, not a few years, maybe many years back, it was something like an EDP manager. Every organization had an EDP manager, and he had the privilege of having an air conditioner in his room because the desktop or the computer needed an AC as per the specifications, right? And so his job was probably just to make sure that the computer is running and it's able to, you have some data that you input, and then you have a DBase type of an application or a database and you use it. From there, and at that time, I mean, he was fairly junior in the organization. There was no reporting and not much of visibility anywhere at all. And in the beginning, most of the work being finance reports and reports to the management on the profits and the balance sheets and all that. Generally, this guy used to report to the CFO. So over time, slowly and slowly, this role became more and more important and more broader, and the IT infrastructure became more complex, this org structure continued. And therefore, you find that in a lot of organizations, the CIO or IT head or the IT applications head would report into the CFO. However, I think in the last 5, 7, 8 years, 10 years, this has changed drastically. And most of the organizations, the CEO or maybe the COO at least, who's actually running the whole show, he has the CIO reporting into him. Now, the designation, as you're saying, whether it's the CDO, Chief Data Officer, or Chief Digital Officer, or the CIO or the CISO, as you said, the head of IT security. These roles are fairly interchangeable. That the role definition is not very well defined, and so therefore every organization, in some cases they call them a CTO, whereas in some others they call them the CIO. But what I have seen now is that they are practically reporting into the board. They are not even the CEO, because at times the reports that they generate are relevant far more to the board, and they actually reflect the CEO's performance. So therefore, I have seen a number of organizations where the CIO is actually has a seat on the board. He may not be a director on the board, but definitely has a seat on the board as an advisor and providing data and providing inputs. The CDO, the Chief Data Officer today, is becoming extremely relevant from a data analysis point of view, crunching of data, generating reports, and making that available. The part of data valuation has not really taken off. I wish it had, but I think that's the next part which we really need to drive at. We need to generate this awareness in large organizations that the value of this data is huge. I'm sure that will also make a difference on the org structure as we are discussing.
Yeah. So great. Yeah, Vikas, you want to add something? Yeah.
Sure. So with your permission, if I may add a few points to what Rajiv said. As we saw, the same thought which I had started earlier, as we saw that a good portion of the investments by IT companies was towards software development. The org structure tilted towards a CTO. Then came the concept of CTO and bringing in the importance of technology in an organization. Similarly, once you start seeing data and information becoming critical portion or a significant portion of the accountable assets, even if it is a historical asset, I think the org structure will tend towards more of CXO level people being involved for data and information production.
Great. Yeah. So now
you're right. I mean, one of the major shifts is now all the move to the cloud and move to shared infrastructure. What has happened is that the part of a CIO's role, which was to look after the infrastructure, that means the servers and the network and all that, that has reduced in importance because the servers are on the cloud now. And the data, the applications, and how the data is used, that has become much more important.
Absolutely. See, when it is a cost center earlier, all these, even technology started as a cost center, it is now a profit center. The technology head has to come up, the concepts of how profitable technology can be. Similarly, if data is a cost center today, how you are capturing data, how you are using data, from cost center, it has to become a profit center, which is and starting point is what you're saying, and bring it to somewhere accountability for it.
So the new term that has come up, well, it's not really new now, it's about 5 years old, is digital transformation. And digital transformation is something where the CIO's role has changed from not just being a support organization, but it is an organization or a person who's integral to the board, because he's actually telling the board that you need to change your business model, right? He's telling the board that if you continue like this, you're going to, the business is going to actually shut down. So you change over to, let's say, the online mode, or a totally different business model is the way forward. And then he's the only one who can say that whether it will work or it won't work.
Yeah, I'm happy you bring about that digital transformation concept in here, Rajiv, because within this digital transformation, what that has done is that it has brought the focus to something that connects the data valuers as well as the IT people, which is the drivers of the value of this data asset. Because both of them, at the end of the day, rely for digital transformation. Suddenly, the focus has become on data quality and data governance, right? And it seems that those same drivers, which are necessary for an effective digital transformation, are also the same drivers which drive the value of data as well. Navi sir, you have in your data valuation standards also identified at least a few important drivers of value when you elaborate on, say that, when you add value, when you aggregate data points from different sources. some input from you on drivers of what makes data valuable. And because there seems to be a commonality between the effectiveness, what it takes to make a digital transformation effective, and what it takes to make the data assets more valuable, there seems to be a great degree of commonality between the two. So your thoughts on that?
Yeah, see, once we recognize that data is an asset, as Vikas was telling, the CIO's role is becoming more of a profit center. Monetization has to come as part of the business thought process. Okay. So of course we have got both one type of data called non-personal data, another as personal data. Non-personal data value is to the business. Basically, we want to protect it because it is valuable to us. My market research data or my finance data is important for us. Now, the personal data, on the other hand, needs to be protected, because if I don't protect it properly, there is an opportunity loss or something like that because of these various legal liabilities attached to that. So there, the organization may say that what is the value of Vijay Shankar's data lying somewhere, kind of a thing, but several such Vijay Shankar's data actually may result in a $1 million fine on this particular company. So the valuation perception from the CIO's angle is not only dependent on the security aspects, but on the nature of the data. So if the nature of data is non-personal, there is some valuation. Personal, if it another valuation. If it is sensitive personal, there must be some other data valuation. If it is a critical, then it may be a different valuation. Why? Because loss of sensitive personal data is likely to create more damage to the company than the loss of non-sensitive data. So this sort of the things you must be recognized. So apart from what I earlier said about the depth of the data and width of the data, these characteristics of the data, whether it is sensitive, non-sensitive. What is sensitive? Now you have to go back to the law and say that what are the parameters or something like that, which again may change from different jurisdictions. So they are driving the valuation of the data. So the person who values the data should have a very clear understanding of the law. When I say that 1-year-old data I want to depreciate, that is because behind my back, I am looking at the law which says that after 1 year, you are supposed to renew the quality of data, or the data when it is collected in the consent, you can take it as a single purpose collection or multiple usage for a single purpose, or for multiple purposes, multiple usages. So the consent or whatever it is taken, that also drives the valuation. If I ask for a concession valid for one single purpose, but multiple times, until the consent is revoked, I can continue to use it for that particular purpose. Now, if I am the person who creates that consent form is not aware of these intricacies, and he does not build in this multiple usage for a single purpose into the consent form, which can happen. If you look at the consent form, they would not have thought about it. Then somewhere some consent may become of no value, or if it is continued to be used, then it may result in liability. So this valuation is driven by the legal implications associated with this particular aspect, which has to be kept in mind by digital transformation agents. When you say digital transformation, business is using data for business making. And say, for example, a product structure will change because you are going to use 3D technology for actually producing some products and selling it. Now, the 3D printing technology, such software is the data. So you buy that and you take it as on license. Whether that license permits you for one time, multiple times, etc., what restrictions, that drives the value of that software. So when we talk of data, it is not only personal data, ABCD name and everything, even the application is a data for which there is a value that depends upon the licenses. So the contract of usage of a software also is a driver. So the person, the legal person who drafts the contract, he should know that if I put in this clause, value will be X. If I omit a particular clause, either by error or mistake, maybe the valuation will be different, because after 6 months, that person will say your license does not permit this. So then
Right.
suddenly the valuation will go and your whole business program will get affected. So this valuation drivers may come in multiple forms from multiple types of actions. This requires something like a wholesome view of the data, and a single lawyer who is looking at contracts, or a technology person looking at one functional this thing, will find it difficult to understand where from the value can come in. I think so. You need somebody who understands these things, and that person only can give an advice to the data valuer to say that this is the kind of valuation you have to work at. Detailing can be done separately, but what elements have to be taken for building a model for valuation, which is going to change every day. See, yesterday I had some data, today I will have less or more. You take one personal data and you anonymize it in one process. Now, after anonymization, what is the value? Is it more than the original value or less than the original value? That itself is debatable. If I have a big data company, personal data with identity is a headache for me. I don't want it. I want only anonymized data. So anonymization actually adds value because it gives me freedom to use it in multiple ways. Personal data, I can use it only for the purpose for which the person, the data subject has given me. So the process called anonymization changes the value, but whether it will be increasing the value, decreasing the value depends on the purpose for which the next stage anonymized data can be used. So you can say that also is a driver. The processes which you are using, whether you use this anonymization, whether you make it unique, like aggregation is one, maybe you filter it in a particular manner. So every type of processing may change the value to the data. This is where technology people, if they know how the value can be changed, they will come up with research to tell the CEO, we are sitting on so much of data which is of zero value. I am only spending money in my data space. Now, if you do something like this, you may create value out of it. So, okay. So, for example, one of the things which I was very much appreciated was this Chris Gopalakrishna committee. They recognized that data business could be a line of business or a vertical for a manufacturing company. Otherwise, normally we look at data business for Google, Meta, and other things. But suppose there is a Maruti. Now, does Maruti have data? It might not have been valued, but they do have. They have data of people who have bought their cars, people who are inquiring about these cars, dealers' information. Now, where is that value reflected in the balance sheet? And that also may not be small. There are companies with employees running to tens of thousands. That is a value. So value comes from the way you perceive. In fact, I say that the value of data is created by technology, but it is perceived by humans. Okay, so a technology will say that this is binary 0, 1, 0, 1, but only a person with some intelligence will give value to that. One more example I will give for a doctor. Sure. An X-ray or something like that. If I and you see an X-ray sheet, it's only a black sheet, some kind of line. But if a doctor sees it, for him, he knows that this depicts a particular, say, disease or something like that. So now where is that data? That data was there in the X-ray sheet, but I and you were not capable of converting that data into our human intelligence. But the doctor had that intelligence. So data looks different for you and me. That data looks different to the doctor. So that's why sometimes value of data depends upon who is viewing that data. Okay. Yeah. So all this needs to be taken into account as drivers.
So Rajiv, because implications of all of this for data valuation and data quality and governance teams, you need to have privacy lawyers on your teams as well, Rajiv, because
Yeah, absolutely. No, I think interesting topic from, I just add to what Navi said just now, since the topic is also relating to how bringing it into the financial reporting, what I call is whatever you said, a summary of this, how do you inventorize data?
Right.
Linking it that, see the same thing as an example. I will give you two case studies. One case study of a value creation using data. Yellow Pages was the directory. All of us know, we have seen Yellow Pages as a basic directory. Somebody used the Yellow Pages and brought in a company called Just Dial.
Right.
Used the same data, became Just Dial, and they created valuation there. They said, okay, I'll tell you the number, but in addition to the number, I will tell you relevant numbers so that you can do e-commerce out of it. Somebody said, you are doing this, I will add on to that. Comes India Property, India Times, comes Alibaba, who brings the data into a platform. And he says that, see, now here you are buyers, sellers, find out on yourself. Why do you need intermediaries like Just Dial? You can do it on yourself. He created much more data there. Added to that, because it was B2B, it is only business to business. Somebody added on that, why should I restrict it to business? Why don't I open it to public? I will put products directly on one side and I will put buyers on the other side. Came the e-commerce. You can see the value chain from a Yellow Pages. The same data has got inventorized into different forms. And where Yellow Pages was purely a directory sitting in our homes below our telephone instruments, became a e-commerce website where people are doing billions of dollars of transactions. That's an example of seeing value creation using data, inventorization of data. I'll just add one more point and then leave it to you, Subha. The relevance of data, like how Navi and Rajiv both have been saying, see, if the data is inventorized, the same data which is expired data for one person becomes live data for a chain. You look at because I work a lot with the edtech players, I can see that very clearly there being a chain there. Byju is into K-12, which means for them the live data is all student population from kindergarten to 12th standard. But what becomes expired data for Byju is a real live data for people who are giving test preparation for GATE, for medical examination, for engineering examination, because these are the candidates most relevant for them to target. The moment somebody has cleared, you know that these people are working for GATE and all. So this data, which becomes an obsolete data for the next chain, becomes the most relevant data for another guy, say Bharat Matrimony. So they would know these people are now live in the market in that particular relevant market. Now, once Bharat Matrimony completes its chain, then it becomes a live data point for Make My Trip, for TripAdvisor, because these people will start now traveling. Then becomes for NBFC sector, where they will say that these are the people now getting into the family zone. So they will start requiring vehicles, start taking personal loans, start taking home loans, start taking other loans. So data needs to be inventorized. The moment you have inventorized, the valuation of data is clear.
So the data life cycle wheels keep getting bigger and bigger, right? Wheels within wheels within wheels.
Yeah, I mean,
yeah, absolutely. Unlike a physical asset, data is non-depletable. You just need to inventorize it so that you know where to channelize and monetize. This could be by usage, like how Navi has been repeatedly saying, it could be by usage. It could say that one-time use of the data. So you are an Airtel, you need to, for every time somebody is calling you in the call center, you need to have a verification. For that verification, you don't need to tell me what it is. I'll give you a window, you enter your name and you enter your password. If it works there, it means it is verified. That is by usage you can pay. You can pay it by time. Like you go to an MCA website today, you pay a particular 100 rupees, 200 rupees, whatever is the cost. For that period of 30 minutes to 1 hour, you can access data for that. It could be by usage, by time, by transaction, by whatever it is, but it is like inventorized. I think that is the most critical part for a value.
Rajiv?
Yeah, I think you brought up a very interesting point. And what I have seen now in my new role as a director in this Digital Futures Angels Network, it's just a network which brings together people, working class. We are all working in corporate jobs or small businesses of our own, who want to do angel investment, right? And you can't, because you don't have the funds to do a very large investment straight away saying, I want to invest 1 crore, we said, okay, if you want to invest 2 lakhs, you go ahead and come and join us, right? So now the interesting part is that you find so many startups who have come out with excellent innovative ideas on how to monetize data, right? And you can't even think of it. I mean, it's very basic data available in public. And for example, all this weather information, all the pollution information, pollution, temperature, wind speed, rain, forecast, and so on. All of this data is actually available from the government free of cost. You have to approach them and definitely take permission, but you can use that data. Now, there are so many applications which are coming out. So there's a person I know who's just making a sort of a platform where all this data is consolidated. And you want to use this data, you become a subscriber and he will allow you to use certain aspects of it. So he's monetized this free amount of data, but he has also made a value addition there in terms of categorization, in terms of bringing in certain filters and certain way of looking at it to simplify it and to make it more relevant for your application. Another interesting startup which came to us was, using the EEG information. You know that EEG where you wear a band and you measure the brain waves. Now, number of these health tech startups have come up where they have used certain signals from the body to diagnose illnesses. Now, I didn't know, but he said, well, there is a doctor on our board which says that the EEG changes if you have a particular illness. It's not data which is very easily available, but just like an X-ray analysis and understanding, you can actually detect and analyze and diagnose a number of illnesses using EEG data. Of course, this new aspect which comes up is who owns the data, what is the value of the data, because he's taking a lot of data from a hospital as data which is actually used to learn, for the ML part in the artificial intelligence. How does the artificial intelligence learn how to diagnose? So he needs all that raw data available to him. So the valuation is a question mark. And one of the concerns I have is most of the startups I don't see are really concerned about security, valuation of the data, and all that sort of a thing. They are very focused and passionate about the application that they're developing. They're doing an excellent job, but I think more awareness is required from our side to make them aware of both aspects, from a security angle and from a liability angle, in terms of if something happens, it's personal data or non-personal data, what sort of action they need to take.
So Navi sir, enough signals for to operationalize data valuation standard of India, and I'm sure you'd be wishing you had more CISOs and CDOs like Rajiv to forward this agenda further, right? So, so to concluding, definitely it seems that the technology people, the valuation people, and as well as the legal people, okay, have got a role to play in recognizing that data is an asset and realizing what needs to be done to increase the value of this asset, and also recognizing in what needs to be done to carefully preserve this asset so that it does not either degenerate, maybe requiring a kind of a impairment assessment that accountants or valuers would like to do, or at the same time pay hefty fines like the 4% or the 2% of the kind that GDPR realized. So what next, if I would ask? Are we ready to kind of start recognizing what would it take, or rather what would it take to start recognizing data assets as a separate asset class? Because we understand the regulators would have a concern if this were to be allowed, okay? And every startup company that has got some data with itself starts claiming that, this data is worth so much. And suddenly something happens, some new law happens, a data breach happens, and you have to do an impairment, that value gets lost. And you would have investors kind of going all over the place saying, what is the government doing? What are the regulations? Why were they not told? So while there is that tension on the one hand for the regulators. On the other hand, there seems to be widespread understanding and acknowledgement that data is indeed valuable. But when we look at the fact that 84% of the 90% of enterprise value is coming from intangible assets, within which data asset is a big class, it definitely does seem that we are ready to take the next step and start recognizing data asset as a separate class. Because what do you think would be the right steps to be taken as next steps to kind of move forward on this?
See, I think the very first point that we are talking about data privacy, protection, laws and regulations, we are, I think by default have recognized that it is a valuable asset.
Right.
In fact, when you're bringing in that kind of a protection, it means it has such a large value that it needs a law which is governing it or a framework. So that is the identity of the asset which is evolving as data. And when it comes to, recognizing in the balance sheet or bringing it here, say I would say data where you say that it has a fixed life, then you do a depreciation amortization approach. But given that data can be having a perpetual life or an immortal life, so impairment testing, and we are saying that you recognize the data as you created, and then impairment testing is merely a framework because you can't value it on a very finite basis. It's an intangible. Right. So even if it is an impairment testing, according to me, is only a framework to see if something is lost somewhere, either you need to recoup it or that is somewhere the cost which you have allocated towards creation of this data was not appropriate. It's just a framework. But the fact that a significant amount of investments are going for collection of data and for converting raw data into a monetizable information is for sure. I think that's what is coming out very, very clearly. And the frameworks are all meaning that way. If you look at the most riskiest asset is money. Right. To govern money, we have RBI, we have FEMA, we have frameworks which are there. I think they are all lost to see that it is regulated. You don't do anything beyond it. Regulated data needs to be regulated because it is a very, very double-edged sword where at some point of time when it is misused, it can cause harm to people. So
the asset can become a liability within no span of time.
It just needs regulation, according to me. So long as because it's such a valuable asset, it needs regulation. But that doesn't mean that somewhere it is more a cost element. It is more a valuable asset which needs to be monetized. It needs to be that. I think it's the future. We need to bring that into the picture.
Yeah, that's true. That's true.
Navi sir, so maybe time to unleash the data protection standard, data valuation standard of India.
Along with that, we have this monetization concept has to be accepted in the new data protection law. Okay, I don't want privacy people to start jumping and say that you are trying to sell personal data or something like that. So this concept of monetization should be acceptable with whatever regulation is there. That should come into the new law the government is planning.
Yeah, Rajiv, any closing comments, concluding comments from your side?
Yeah, what I was about to say is that in my roles as CIO, I was a CIO in EY for 12 years. Most of them, when I start my role or job, I deal most often with the CFO because the concern of the organization is that you have to reduce cost and bring in efficiencies and get the latest technology, but keeping cost in mind. So I used to work very closely with the CFO. But after a couple of years, I found that the person I was working most closely with was the head of legal. If you understand what EY does, EY has audit and advisory as two broad roles or businesses that they were doing. And both of these are very highly regulated in all countries, right? Audit is highly regulated, and so is advisory in various fields, whether it is taxes and so on. And the most interesting part was that EY was a global company, which means there were regulations at a global level. It was US based, so therefore a lot of regulations either in EU or Europe based would be applied on us, forced down on us. But at the same time, we were governed by Indian laws. We are Indian entity doing audits in India, group companies in India which were doing audits here. So we were for, those laws are applying to us. So I think the best part of my job in the subsequent years was dealing with the legal head and trying to understand the laws, because he said, look, I'm not a technology person, I can't understand half of it. And I said, I'm not a legal person, so I can't understand that part of it. So both of us used to work together in terms of not only understanding the laws, but also interpreting it and explaining to the business that this is the impact. And it had huge impact, which was not only at a India level, but also at a global level. So I think we need
Great.
people who are, both technology as well as legal. Techno-legal, I don't know what the term is.
Yes, Ramesh sir, I think that was all from our side. Any questions on the chat
From the
session?
audience, from the participant side.
Audience, yeah.
Just checking as of now. Anyway, I think you are on time, Subraidu sir. Thank you very much, really. And
Thank you.
anyway, Mr. Navi sir was part of it, and he had concluded it. And I'm sure, as you said, I was really keen. I was following you. That maybe now I think with Mr. Rajiv being there, Mr. Vikas being there more, I think we should at the FDPP side should look into it. Right? Just one question as we speak, just be there. I'll read out for you. Why there is always the improper analysis by the tax committee against every company and whoever hiding between black money and white one? What are the main pillars of data security? Okay, two different questions, I think.
Yeah.
Why there is always the improper analysis by the tax committee against every company and whoever hiding between black money and white one?
Maybe if I've understood the question, what it could possibly be looking for an answer, if there's so much of data around transaction that is going on, how come unearthing of black money transactions is still
It's
taking
not happening. Oh, beautiful.
is not happening, and can't it be done in a more maybe like preventive policing somebody's talking about in the previous session, maybe preventive analytics about being used by the taxman to prevent creation of black money? None of us are tax specialists here, by the way, but Vikas, would you like to take a shot at the kind of?
I think as a user of the income tax online system, I can say that they are doing an excellent job.
In fact, I was about to say the same. It's more regulatory than anything to do with our data valuation. But you can see now that the AI being factored in, where a lot of the exception transactions are already being monitored. I think data has already been used by the relevant authorities to sharpen the analytics from their side. To the extent that today I'm sure we all have the similar experience that you file the return today, and for individuals, salaried people, within 1 week to 10 days, you get a refunds back.
True. And also notification also comes in place, whether any demand or something is in, you need to pay. And quite interestingly, even 2010, 2008, people are getting it now. Yeah. And then you have to go and talk to them. I think that next question would be connected to your topic, Vikas sir. In general, business use customer acquisition cost as expense, which is already reflecting in books. It may further need to be classified based on value. What's your views?
Excellent. I think this was a question I was waiting for, actually.
Really? Great.
Which is what I said, which is what I touched upon earlier briefly. The accounting framework we are working in is still historical cost. Let's be clear that the framework of accounting has not moved from historical accounting to future-based accounting. Our balance sheets at best reflect only the appropriation of capital being invested in the business. So when you say that what is being accounted ultimately is to say in the P&L today, I have incurred 100 crores. Should that 100 crores be compared with the relevant revenue of today? Or there is some cost which was incurred for tomorrow? All we are doing is historical cost is being appropriated between the revenue earned today and tomorrow. That's it.
Right. Correct.
Which is where it is well fitting into the historical framework today by appropriating some portion of cost to future. Right. So we have not yet, our accounting framework has not developed to go into future-based accounting, which is what share market, capital markets are doing. Whereas financial reporting is on the historical basis. So as a starting point, we need to do that. It requires a big change for us to look at from a future accounting point of view.
Great.
I hope that clarifies. Right? I just asked.
Right.
So, Subraidu sir, can we wind up as
Yes. Yes.
once again, Mr. Rajiv, Mr. Vikas, Mr. Subraidu sir, thanks, and having you all of you on the panel, and very nice discussion along with Mr. Navi. Thanks once again, and Mr. Rajiv and Mr. Vikas, on behalf of FDPPI team, would request you to work closely with FDPPI on this area, as Mr. Navi had already spearheaded. Let's try to work together. Thank you very much, and have a nice evening.
Thank you very much. Wonderful interaction with the team here, panelists. Thank you, panelists.
Thank you.
Thank you.
Thank you. All. Bye.